Hi guys and girls, it's Daniel Walsh from Your Property Wealth. Today we're talking about a market update. What we want to do is show you exactly what's going on in the market from a buyer's agent perspective, how we're getting deals done and what we're seeing. So we're going to be focusing more on Brisbane as that is the market that we are currently buying most of our properties in. What we're seeing firstly is agents are getting fewer listings at the moment. So we've been talking with a lot of agents over the last couple of weeks. What they're saying is that there's prospective vendors and going through houses that they don't want people going through their house in a time like this. And what they're also talking about is there's very few people reluctant to sell because they're not forced to sell currently. They don't think that they need to sell because there's nowhere for them to go. So if they sell a property and they're an owner-occupier, let's say, they then need to find another property. And this isn't the best time to be going out there and looking for properties if there are fewer listings, plus they don't want people to go through their home. So what we're seeing is there's fewer listings, and the listings that are coming up, they're going more off market. So we're seeing that real estate agents are starting to call people like us, buyers agents, are starting to give us more off market deals currently, because what they want is to be able to get a nice, easy, smooth transaction without having to go to market, without having to do the inspections, because right now you can't go out there and do open homes. So what the agents are having to do is do private inspections. And if they have to do 5 or 6 or 10 private inspections one by one to get that property sold, then it's going to take them a lot more time to be able to do that, which is also going to take more time out of them being able to go out there and prospect for new clients. So what we're seeing is the move towards off market, where listings, you might not see them on realestate.com, but they are getting done in the background. They're just getting done with more agents and buyers agents currently. What we're seeing as well is the prices have come back around 5 to 8%. Now, the reason why they're coming back, it's not that it's shown in the data that they've come back 5 to 8%, but let's say 6 to 8 weeks ago, what we were seeing in the market was when we went to market or went to a property or an open home, we saw around 20 or 30 people would go through that open house, and within the first day would have 5 to 10 offers, and everyone was going in over asking price. So basically the FOMO was kicking in. People were desperate to buy the house and they were willing to pay a future value for that house. So if the property was listed for 450,000, let's say, they might go in there and put an offer in at 470 or 480,000 with really good, strong terms, so that they could secure that house, knowing that there were a lot of other buyers in the market at that time. So when we're talking about a 5 to 8% decrease in valuations from properties, it's not that they've gone down, it's now that they're being more realistic, vendors are being more realistic, and they're selling for the price that they advertise, or maybe say a couple of percent under. So there's no longer the buyers out there saying, I'm going to pay a future value for that property. They're now looking at it saying, I'm really wanting to pay the value of the property or what it's worth today. Now, what we're also seeing with the fewer buyers out there, so we're seeing that there's less listings, but there's also fewer buyers out there. Now, let's say that 3 to 4 weeks ago, we were seeing, say, 20 or 30 buyers coming through to look at an open home. We now may see only 5 or 6 people interested in that property, but those 5 or 6 people are genuinely interested in the property. They are out there, they are looking, they have their pre-approval, and they're not really mucking around. So we're seeing that yes, there's less listings, but there's less buyers as well. So the supply and demand at the moment is still fairly much in check. And again, when we're looking at from the vendor side of things, the vendors aren't willing to just give their properties away because they don't have to. They're not under mortgage stress like people think, because at the moment you can put your mortgage on a bank holiday, so therefore they're not forced to sell their properties. So we're seeing that in the current market, where we're seeing that buyers are meeting the expectations of the sellers, but we're not seeing an overinflated value like we were, say, maybe 2 months ago. Now, the markets that we're saying not to buy. Now, the very first market that comes to mind is a holiday destination, a tourism located area. Now, the reason being is a lot of these houses that are purchased, and when the property markets are booming, a lot of these markets get purchased and overvalued. The reason being is, let's say that somebody lives in a fundamental area in, say, Sydney, and their house goes up in value. They then extract the equity and they think it's a really good idea to go to the area that they went on a holiday with, and they're going to go there and buy a holiday house. Now, what happens in times like this of uncertainty is the very first thing to get sold is the holiday home, because they don't need the holiday house, they wanted the holiday house. So therefore, sticking away or staying away from the holiday and tourism locations where they're going to be hit hardest from a job perspective, they're going to be hit hardest because a lot more people will need to sell those properties, or even if they don't need to sell them, if they're just feeling uncertain about their job, or they're just feeling uncertain about their position and maybe how much cash that they're holding to get through this time, they may offload those types of properties first. The other end is the high-end properties. So what we always talk about is when you buy high-end properties, those are the markets that fluctuate the most. They can go up, but they can equally come down very, very quickly. And again, this comes down to when you're buying a high-end property, people want to buy a high-end property. They don't need to buy a high-end property. At the end of the day, people need housing. They need affordable housing, or they need housing to be able to live in. There's more demand at the affordable level. But when you come up to, say, the high end, people are looking at that and saying, you know what, I am going to buy that as a luxury. In a market like this, you don't need to buy luxury. So these people are going to now start to pull back from the market. There's going to be less buyers in this market, but there's also going to be more sellers. The reason why there'll be more sellers is high-end properties are generally tied in with the stock market as well, because a lot of high-end buyers also dabble in the stock market, and right now they've just had a fairly big hit to the stock market, which their overall wealth has declined. So if they've had, let's say, revenue from their business drop and they've been hit by the stock market, they're going to be more likely to start thinking unclearly and start wanting to sell their home, and they might even be going selling their home for a cheaper price, because they need to get out. They might not be able to afford the payments or anything like that. So the high-end properties in times like this are more volatile. Where to buy? Affordable locations with strong fundamentals. As we have always stuck with our strategy where we buy more affordable properties, we buy them in strong fundamental locations. This is where we're going to see more pent-up demand over time. If people can't afford or don't want to buy a higher end property, it's going to push more people into an affordable bracket, and eventually there's going to be more pent-up demand for these types of properties, even from a rental side of view. So they're going to be going from a rental side plus a buying side. So we'll have more buyers around that level, and we'll have more renters around that level as well. Plus, what happens is everyone needs a house. So these types of houses are a necessity house. They're not a high-end luxury home where people maybe have done well in their life and they now want to buy the high-end luxury house. They're now looking for necessities, and the necessity house is close to jobs, close to where they live, but more an affordable bracket. So if you look to buy at the moment, you'll be looking to buy good, strong, affordable locations which have strong fundamentals, strong job growth in the area. Now, if you like my videos, can you please like, share, and comment? And until next time, guys, have a great day.